All right, guys, welcome back to the live stream. There are people who came from the weekend live stream. Welcome back. We'll be waiting for about 2 to 3 minutes for people to jump in to get the notifications in their email that I am live or just on the YouTube app. But overall, I'll just be waiting for about 2 minutes here until people jump in. Thank you guys for coming in. Right. Let's go ahead and get started. So we have CPI data coming in tomorrow. All right, so we basically have March CPI data, and the consensus estimate is currently at 5.2%. So that's a huge drop from February 6%, right? And I believe we came in line with expectations in February, if my memory serves me right, or I think it was slightly below. I believe the consensus was 6.2. The consensus estimates was 6.2% for February, and then our actual number was 6%. So this one is a steep drop from that 6%, because if analysts and economists are expecting a 5.2% in the March inflation report, that's a 0.8% decrease, all right, from 6%. So that's going to be a huge drop. My only worry here is that, if the market doesn't, if the data comes in a little over 5.2% because of the vast difference, right, between 6% and 5.2%, there's a chance that we can react negatively in tomorrow and in pre-market. So ideally we come in line with expectations, right? Because this huge drop is, again, a huge drop, right? So if we come in line with expectations, then that means inflation is going down, right? We're seeing a huge decrease in inflation, and we're getting closer and closer to that 2% target set by the Federal Reserve. Okay, so rates will go down eventually if the Federal Reserve determines that inflation is continuously going down, which is what they want to see. And so if March's inflation data comes out to be 5.2% or even lower, right, at 5%, let's say, they will for sure be looking forward to a potential pause and an eventual pivot in their monetary policy back in around summer is what I would guess, right, middle of summer. And so you guys have to remember, right, the Federal Reserve will most likely pause first and then pivot, right, and start decreasing interest rates around midsummer. So again, ideally, right, we come in line with expectations because again, 6% to 5.2% is a huge drop, right? And the consensus is telling us that prices are going down. Right, we're getting that price stability that the Federal Reserve wants. Now, I don't know how much of that is a lie, right? Because energy prices are still very high, food prices are still very volatile. Well, both energy and food prices tend to be volatile. And so tomorrow, I'm going to take a look at the core inflation data as well, right? Core CPI. So it's going to be very interesting tomorrow because of such a huge drop in the consensus. Right, from 6% in February to 5.2% in March. And so again, this is the line here, right? The line in the sand that you guys have to look out for tomorrow. We will want to see 5.2% as the actual, right? Estimates are 5.2%. And the actual could be 5.2%. That's what we want to see. We want to see the number to be in line with expectations because it's a huge drop from 6% to 5.2%. It's a 0.8% difference. That's a huge drop because we've been seeing kind of a stalling in the decrease in the inflation data between December to January, if you guys remember. And the markets were spooked by that. And so hopefully we start to get a larger move to the upside if we do get that inline expectation number. However, here's the other risk. Because of the fact that it's such a great difference between 6% in February to the consensus estimates of 5.2%, there is a slight chance that we will actually be over the consensus estimates of 5.2%, right? So we won't beat it. So it could be at 5.5% or 5.6%, who knows? And if that happens, the market will definitely react negatively because of the fact that the estimates were so low, right, from 6%. And that's one thing that you guys have to understand, right? And if you guys are thinking that, tomorrow, if you get like 5.5 or 5.4%, and you guys are scratching your head as to why the market is gapping down so much, well, it's because of that reason. The market will say that, the difference between 6% to 5.5 or 5.4% is good, but it wasn't able to come even in line with expectations, or at least beat it. So that's going to be taken as a negative catalyst tomorrow morning, pre-market. And depending on where we move, if you go to the downside, because of the fact that the 6% to 5.2% for the estimate is so great, the difference, there is that slight chance that we can see a move lower tomorrow if we don't meet expectations or at least beat it. And so, the market continues to desensitize on every single economic data that comes in. Even last week, we had manufacturing data, right? The ISM manufacturing data come in as well. And it continues to show us that the manufacturing sector of the entire US economy is slowing down, right? We've been going lower and lower. We're still staying below that value of 50. And that usually means that the economy is in contraction, right? At the value of 50, if we're seeing the ISM manufacturing data staying over 50, right, that means the economy is growing, expanding. But right now, the manufacturing data tells us that we are continuously slowing down and in purchase orders, right? Prices and etc. right? And employment and other key factors that go into determining the overall value of the ISM manufacturing data. So, you know, even if we got that last week, we barely saw any movement. All right, and that could just be because of the fact that there weren't a lot of people participating last week, as you guys can clearly see in the volume of last week, the entire volume of the last, well, there were only 4 trading days last week. So that could be the case. However, that was a very significant data for the economy. So this tells you that the market is slowly becoming desensitized to every single key economic data. And so tomorrow, CPI is still considered a very, very important data point. So the market will react. But again, as we continue to move forward in this fiscal year, we will see slowly a complete detachment from reacting too volatile, too volatile or too wildly to very significant data points like inflation. So tomorrow, even if we do get that negative or even positive reaction to inflation, I would expect to see the markets just move at least, maybe 1 to 2%. I mean, that's already a large move. All right, but I'm not gonna. I don't want to see like 5%, 6% moves overnight. All right, that's not what we want to see. And also, SPY futures right now. All right, if you take a look at the minis here, we're very, very tight. Even the futures chart pattern is very tight. We're still making a nice bull flag as I wanted to see after we got this nice breakout from middle of March to late March. Excuse me, guys. And so, hopefully tomorrow we can see potential, usages of a positive reaction for us to react to the upside and break out of this bull flag that we're currently making. But who knows? We might not even see any type of reaction. We might just see a very small reaction to the inflation data. So there's a lot of possibilities. But again, the most kind of highest probability the highest probable reaction that we can get from the market is that, either it's going to be a 1 to 2% move, right? As the difference between February 6% in inflation to the consensus estimates for March is 5.2%, and so that is a huge and alarming actually difference. Between 6% to 5.2%. So obviously it's a good sign if we do see a move to 5.2%, right? If we get that nice data point to come in line with the consensus estimates. Hey, welcome guys, welcome. Thank you guys for liking. Let's see if we can get to 10 likes. And for the people who are just joining in, make sure you guys put in the tickers that you guys want me to go over. We already have one person here with Amazon and Uber, so make sure you guys put in the live chat room down below. So SPY again, we will most likely react a little bit wildly tomorrow morning, right before market open, just because of the fact that we have such a great difference between 6% to 5.2%. The biggest risk is that we don't come in line with expectations. So we could probably come in at 5.5% or even 5.6%, just anywhere between 5.4 to 5.6% could be bad, even if it's a drop from 6%, right? Because of the fact that we haven't at least gone in line with expectations at 5.2%. But this also, gives me a flag in my brain saying that, there must be a reason why the economists and analysts both think that we're going to have a 0.8% decrease from February's revised CPI data. So so that's going to be pretty interesting to see. Hey, Kane Linkson, thank you. Okay. We got NVIDIA after Amazon Uber. Thank you very much. So hopefully you guys are following along. All right. Make sure you guys are subscribed as well to make sure you guys are able to comment and have a chat with me in the live chat room. But overall, that's kind of what I'm expecting tomorrow. Now, with that information in mind, we are still in a very tight range. So don't take a look at the my levels here. Okay. So let's just take a look at what happened over here back in early February to mid-February and then to where we're at now. So we're in a very tight range, but kind of in a wide price range wise, okay? But we've been chopping around, bouncing at major levels of support and then rejecting at major levels of resistances. And if you kind of translate this area to here, it looks very similar because if I bring back my levels again, we're using the same levels. So this makes complete sense, right? And that's the reason why we've been going up and down, kind of bouncing and oscillating between major levels of support and resistances. And so we're still going to continue to play within the range that we made between 406 to 413, as we saw in early February to mid-February. Now, tomorrow that can change, but I truly don't think that that's going to happen. I think we can still stay within the 406 to 413 price range. It all depends on how we move tomorrow morning. And again, we're still desensitizing to every single market or economic data that comes out that will be crucial to the future of the equity market. So, even if we get a surprising, beat or even surprising, if you don't beat it at all at 5.2%, if you get, somewhere between 5.4 to 5.6%, that can be a very negative reaction by the market. But again, whether it be a negative or positive reaction, I still think we're going to stick to this 406 to 413 price range. So 406 is the major level of support on the daily. 413 is the major level of resistance on the daily. And so make sure you guys have those levels in mind. I'm not going to go over any of my intraday levels here because I've gone over them 4 times in the past 4 live streams. So if you guys want to take a look at that, make sure you guys go back to the recordings in my channel. Just click on or tap on the live tab, right? It says live, and you guys can be redirected to the videos where it's only my live streams, all the recordings of my live streams, and take a look at the 4 past live streams. I go over every single level here that is drawn over here, right? So 407.80, 408.50, or even just 408, and 409, 410, 410.50, okay? And eventually 411.50 as well. So make sure you guys take a look at that. All right. Now, with that in mind, okay, we ended up with a lower high compared to 411.91. And I told my members this in the TA video that I sent out with my CFO Swing and Watch newsletter, which you guys can find using the link down below. I told them that there could be a potential play here where we make this lower high compared to this first high at $411.91. And so far, thanks to this close, we got that, right? We got this lower high. But at the same time, remember, SPY futures is forming a nice flag. And so whatever the futures is doing, the futures market, right, SPY will do as well. So we're making this nice bull flag. This is a nice impulse run up, which is our flag pull, and then this descending level of resistance, and then this flat support around 4100 or 40099, if you guys want to be specific, is the flag here. So these 2 trend lines, this descending level of resistance and this horizontal level of support, is what creates that flag. So tomorrow I really hope that we don't get such a wild reaction and we stick to the price range between 406 to 413 so that we can at least form and complete this bull flag for us to be able to break out of it eventually in the next couple of weeks, or even the next couple of trading days and into next week as well. So does anyone have any questions about that? All right, so that kind of concludes my overview on SPY tomorrow and what we can expect with CPI. So again, the difference between 6% in February to 5.2%, which is the consensus estimates for tomorrow, is quite wide. And so there is a huge risk of us coming in at 5.4 to 5.6% actual, and that can be a negative outlook for the markets. The markets can very much look at that as a negative factor and gap down tomorrow. So that's a major risk that you guys have to be looking out for. All right. Anyone have any questions? Hey, thank you guys for 5 likes. I see some newcomers as well. Let's see if we can get to 10 likes tonight, guys. 10 likes. All right, if there aren't any questions left, let's go ahead and take a look at our first name here. So Amazon. So Amazon is looking quite good. And so I believe I mentioned Amazon maybe 3 live streams ago. So we have a major level of resistance on the weekly time frame at $104. Right, so this is a huge level here. This is the line in the sand for sellers to continue to push the price lower. So this is where sellers are continuously shorting, and they have this huge wall here, this huge ceiling at 104. However, we've been making higher lows in this weekly time frame. All right, so you guys can clearly tell that we have a higher low. And so if we have higher lows, that indicates that we can be potentially in a nice textbook uptrend. And when we are in the textbook uptrend, we also want to see higher highs. And the most recent higher high pivot point that we got was at $114, all the way up here. And this was due to earnings, the earnings reaction. Hey, welcome guys, welcome. I just finished talking about the CPI data tomorrow for March and what we can expect. So if you guys missed out on that, make sure you guys come back to the recording. Just go on the channel, click on the live, the tab that says live, and you guys will be redirected to the recordings of this video. And again, once I finish my live stream, the recording of this video will be automatically uploaded. So with that in mind, again, we just need a higher high that's higher than $114. And so that may take weeks, maybe months, who knows, right? But again, you know, this 114 is the huge crux to a potential breakout to the upside, as we've been retesting it since back in late October to mid-November. And so we have our first retest here as circled here, second retest here, and now we have our third retest. And if you guys know the 3 golden touch rule, whenever we retest a level, either whether it's a level of resistance or level of support, and we retest it 3 times, we tend to get a nice breakout on the 4th retest, right? So this 3 retests here, or 3 touches at 104 is a very good sign for the bulls for the long term, right? As long as we come back to 104 and we create another potential higher low point here, another third higher low point, then we will be good to move to the upside, retest 104, and then break out of this huge area of supply or level of resistance eventually. All right. Now, again, Amazon here, make sure you guys take a look at Amazon. It's looking very, very pivotal here. There's a huge pivot point on Amazon. So make sure you guys take a look at this one. All right, next one is Uber. So Uber on a daily time frame, right? So this is a name that was given to the CFO Swing Watch members for the past 2 weeks because number one, we are seeing very, very tight price action, and we want to see this, right? Uber was barely affected by SPY's wild movements in the past 2 months, right? Past 2 months, okay? We kind of made like a V-shaped recovery here off of March lows, while Uber has just been moving down very, very slowly and consolidating very, very well. And that has allowed us to see a nice flag forming here based on this nice impulse run up since late December into early January of this year. And this is what we call a flag pull. And then, just like I explained on SPY, we had this descending level of resistance that creates the flag along with this horizontal level of support at $30. And as you guys can clearly see here, and as I've already explained to my members on Sunday night with my private TA video, we have made this nice double bounce at $30, right? And so far, we haven't revisited $30, this area or level of support at $30 flat, this whole number level. And so far, we've been making higher lows for the past 4 consecutive trading days, including today. And so that tells me that we can see a potential breakout over this descending level of resistance, as we have now retested it multiple times yesterday and today. And so we even had a nice little peek over it, and ultimately we ended up succumbing to yesterday's sellers at the high of the day from, well, the previous high of the day here at 31.79, as today's high of the day was 31.80. So there's only a cent difference there between the highs of today and yesterday. Now for Uber, just watch out, okay? We're getting an increase in volume here. That's great for a potential break to the upside, but again, we have closed below the 10 SMA, my red line here, this oscillating line. So the short-term momentum is kind of in danger here for the bulls. However, I'm going to continue to stay optimistic because of the fact that we haven't retested $30 again for a third time, and instead we've made higher lows consecutively for the past 4 trading days, including today. And so again, watch for a confirmed breakout over $32, or if you guys want to take an early entry like I did today, look for an entry over 31.50. All right. So this one should be a long-term play, as big money fund managers have been piling into this name while they're all leaving the competitor for Uber, Lyft. Right, so Lyft has been getting pounded, especially after that report came out that the management was absolute crap, basically, right, for the company. So there's been a lot of money coming in, and a lot of inflow of money from big money fund managers coming into Uber. All right, so Ken, if you're still here, let's go over NVIDIA. So NVIDIA has been a true monster, right, since the lows back in October, right? October last year, and even if you're in with long-term shares, you could have DCA'd in December as well to grab some more December lows. And so if I take away all my lows that I've drawn from NVIDIA, right, this is a huge run. I mean, just from December lows, all right. Okay, so that's basically to today's close. It's nearly a 95% return, right, from December lows. That's huge. And so at some point, I'm going to expect a slight pullback back to my daily 50 SMA, since we haven't retested it since, again, December low. So that's more than 3 months. So, I'm not going to expect a huge, rapid fall and potential reversal to the downside, because again, this is a very, very nice run up, and this should be sustained as long as we can come back down to retest the daily 50 SMA, which should be around the next few days, the next few weeks, around 250. So as long as we come back down to 250, or if we decide to move lower, as long as we retest and hold 240 as a new level of support on the daily time frame. And guess what? The daily 50 SMA is currently sitting at 239.79. And so if we can round that up, and that's around 240, we can definitely use 240 as a new level of support on the daily time frame, so that we can consolidate, right? And then again, move higher to create that nice second leg up higher. And again, NVIDIA has been on such a huge move compared to the other semiconductors, because it's basically telling investors that NVIDIA is going to be a strong player in the AI space, right? AI, and even the virtual space, right? The metaverse, virtual reality, right? And that kind of all requires AI as well, and its chips. And NVIDIA has kind of separated from other semiconductors by telling investors that we're going to be a huge player, a huge company to be reckoned with in the AI space, right, with the semiconductors, right? So I believe Google is also trying to enter into that space as well, as they had news last week, and I believe that's the reason why we got a nice gap down between the first Tuesday of April to Wednesday, when Google said that their own, I believe, chips, if I remember correctly, is a lot more reliable, efficient, and just overall better, is what they said in that report than NVIDIA. So NVIDIA, I really hope to see some pullback here, at least to 250, 251. Or if we pull back even more, back to 240. But again, ultimately, all I want to see is a retest of my daily 50 SMA. So that could be somewhere between 240 to 251. all right? A nice little 10 to 11 point range, depending on where you want to see that nice bounce between 250 to 251. But that's kind of arbitrary and subjective at that point. So with that in mind, NVIDIA is kind of losing its momentum, right? How do I know this? Well, volume has been decreasing ever since we've had this nice run up since December lows, right? The most recent lows that we can remember compared to October. And the reason why I say that is that, well, we started this nice lower high trend here, right? So whenever I see lower highs starting to form during an uptrend, right, a very, very large uptrend, and especially when we're getting a little bit overextended, as again, we have moved over almost 95%, and we did hit 95% somewhere today, right, in return since December lows, right? That's almost 100% return, right? And so that's a pretty good sign that we are overextended. And even on the RSI, last week, we were sitting at over 70 in the value for the RSI. All right, just last week, last week, and well, last week and last week, we were sitting at around between 70.98 to 73.50, right? That's overbought, right? So that usually indicates that we are ready for a pullback and consolidation. And again, the RSI does not tell you that we're going to have a nasty pullback. We just need some sort of a orderly pullback, a very constructive pullback to start a nice consolidation. So if we do start to see some sort of a base here, right, it'd be very nice to see some sort of a base forming between, I would say, 280, right? 280 to, again, around 251 or 250, that would be great, right? Where we just oscillate back and forth between 251 to 280, and we can start to kind of range trade between these two levels. All right, so let me kind of clean this up so that you guys can see that. Hopefully that was insightful. There's a mouthful there, but I kind of wanted to give you guys a full insight since NVIDIA has been such a huge player for a lot of people this week and last week, and well, the past couple of months actually. So again, 252 or 251 or to 280. All right, if you can kind of oscillate here and range trade for the next couple of weeks or even the next few months, 1 to 2 months, that would be great for us to at least have a healthy consolidation before we head up higher, and obviously get back to the highs of 2021 and even 2022 back in mid-March. All right, Ken. Hey, 6 likes. Thank you, guys. Hey, Adriana. Welcome. Good evening. Good evening. All right, so we got down 3 tickers here. Adriana, I know you always have some tickers that you want me to go over. So if there are any, make sure you send them over now. And Adriana, I know you weren't part of the first part of this live stream, but I did go over what you guys should expect with CPI. I kind of go over the data, right? And what we're expecting tomorrow and what you should be expecting. So hopefully you are able to go back to the recording of this live stream, which will be again posted right after the live stream is done. It will be automatically posted. So make sure you guys go back to the first, 5 to 15 or 20 minutes of the live stream, okay? Hey Ken, you're welcome. Adriana, ticker coin. Gracias. De nada. So, coin. Yeah, so cryptocurrency names have been absolutely squeezing to the upside. We were looking at Mara as well, and I didn't catch this one because I was way too focused on other names like Uber. But this one was a clear break over $9 as it broke over the 200 SMA. And so coin here, on the other hand, is now staying over all my major SMAs. So if you take a look at the SMAs here, all of this looks very bullish, right? However, Bitcoin is a very volatile asset, right? Cryptocurrencies in general. So there's a chance that we can see another pullback tomorrow, right? To make another lower high point. compared to this pivot high point of $85.38, as this one was also a pivot high point, well, a lower pivot high point compared to this one right here, 87.63. So there's still a chance that we can consolidate. However, okay, I'm going to be bullish here. Okay, for the sake of this name and for the sake of for you, Adriana, if you're long on this one already, there is a chance that we can come back to at least, you know, $77. Okay, 77 could be your maximum profit target if you're long right now. That's another 7-point move from today's close. And I just love the fact that, again, we just saw a daily golden cross where my 50 SMA here, this dark blue line, is crossing over the 200 SMA, which is my yellow line here. So 50, okay, 200. This is a bullish crossover to the upside, and which is what we call a golden cross. All right, that is a long-term bullish indication. And compared to my short-term SMAs, my 10, okay, and my 21, right, we're starting to see a coil to the upside of both my 10 and 21. So that's another good sign that the short-term momentum or trend is to the bullish side. All right, so both the short-term and the long-term perspectives and trends is pointing up. So again, you know, you don't really need to see the SMAs, right? If you just take out the SMAs and just take a look at the candlesticks, right? We're obviously in an uptrend, and so far it's a great breakout. Why? Because after we have broken out of this descending level of resistance here, right, as we're kind of pulling back very constructively as well. How do we know? Well, the volume, right? We're stepping down as we pull back into the new support at $61 or old support in the past. We bounced very nicely, and then we broke out of this descending level of resistance with increased volume. And today we got even more volume. So as we continue to move up higher, we're getting even more volume. So this is very, very good news for crypto-related stocks like Coinbase, Mara, and also Riot, right? So, you know, this one, I expect us to hold over $70 tomorrow. Well, that all depends on how the market reacts to the CPI data in pre-market. And even if we do have a nice gap down in the overall markets and also coin decides to gap down, I would say, you know, grabbing some coin somewhere around $66 to $68 is always a good idea here, because of the fact that we are in a confirmed uptrend backed by bullish volume. And so if we do decide to go in tomorrow, and if we do get a gap down on coin, and if we do get a bounce at 66 or around 68 or in between that 2-point range, our maximum target for Coinbase will be $77. Okay, Adriana? Hey, thank you guys for 6 likes. Hopefully everyone has been able to understand me, right? If there are any questions, please put them down in the live chat room. All right, so if that all made sense, Adriana, I want to go over one ticker here that you guys should be watching for the future. All right, MNST, Monster Beverage Corp. All right, so this one just made new all-time highs, and that was due to a 2-for-1 stock split. Right, if you guys don't know what that is, just know that the stock price was halved, right? And how do you know the original, the pre-stock split share price? Well, just multiply the current close here, so 52.28 by 2, right? Just multiply 52.28 times 2. So pre-stock split price, we will be sitting right now at $104.56. All right. So, this name was able to finally break out of this deadlock of a consolidation between $49.52 to, I would say, 52.75 resistance area, this huge base for months, right? Since last year of early December and late November, actually. So we're right back into this area of this consolidation after reaching a new all-time high at $54.52, or 54.52 times 2, a new high pre-stock split of $109.04, right? So that's a huge number, and obviously we have come back down to retest major levels of support at 51.50. And what's interesting here is that we have created a nice tweezer double bottom, and this is different from a regular double bottom because we have a bounce at a general same area point around 51.50 with 2 consecutive back-to-back candlesticks, and that's the reason why we call it a tweezer double bottom. It's very, very small between the two bottoms here, right? The left bottom and the right bottom distance between them is very, very close because, again, this double bottom has been created by 2 daily candlesticks, and this usually tends to create a continuation candlesticks the next 2 to 3 days as we continue to move up higher. And so today we didn't get that much volume, unfortunately, but we were able to hold over the daily 21 SMA, as seen in the past 2 trading days where we formed this tweezer double bottom. We broke below the 21 SMA, but we ultimately bounced at this 51.50 area, this whole number area, and had a nice reclaim and remount of the daily 21 SMA and ultimately closing over it. So this tells me that this is just a nice constructive pullback, and we want to see, well, the buyers want to see a continuation back to the upside and potentially have another higher high point, which will mean that we will get another all-time high price. And so for MNST, I expect the next all-time high price to be around 55. But if you want me to be more bullish, I would say 56. All right, these are very conservative targets to the upside, especially as we're going into new all-time high areas. But again, this is just all speculation. Monster, again, is a very, very nice name to hold on to, as it is an American staple company, right? And also the growth and the return that it has had for the past, 2 decades, I believe? Or is it almost 2 decades? No, I think it is 2 decades. I go all the way back. Oh, well, more than a decade. Well, no, I would say right around here is when we start to see the actual, monster growth. Get it, guys? Monster. so that's where we got that nice monster growth around here, right? So I would say when the great financial crisis happened, right? So that's when the monster growth started, and we've been just moving up and up and up, straight up ever since, right? It kind of looks like Apple here. So again, on the weekly time frame, right, we are right back into this consolidation. And if you guys noticed, I've also really mentioned this multiple times on the weekly time frame. This huge cup and handle chart pattern, right? So we had this huge cup that spans, let's see, almost 3 years, right? So at least 2 years, okay. And then we have a handle that extends from this this cup here, which is what we call a flat handle, right? So right over here, and so we were attempting to break out of this handle, but again, we just pulled back, and that's very typical when we get into new all-time high levels. Okay, we tend to get a very, very big pullback, and that's what we got, and we came right smack down between the consolidation that created this flat handle here. Okay, so we have a nice cup and handle, which is ultimately an inherently bullish chart pattern. Okay. Hey, you're welcome for the analysis. Well, you're welcome for that. So thank you so much for the analysis. You're welcome. Thank you to everyone who has who have submitted the tickers here for me to go over. All right, so Monster, please take a look at this one. Have it on your charts. We can get a nice run back up to at least 52.75 or even 53 in the next few trading days, even by the end of this week. Who knows? But Monster should continue to move up higher thanks to this tweezer bottom that we just had between the last 2 consecutive trading days. All we need to see is a continuation candlestick, which could be a nice full-bodied green candlestick to the upside, which will confirm for a fact that this is indeed a nice tweezer bullish double bottom chart pattern here. Okay, so look for an entry point. I would say a confirmation entry point over 52.50, or if you guys just want to keep it, play it safe, look for an entry point over 52.75. All right, that was the previous all-time high point. All right, I seen right here on this specific candlestick right before or right after the stock split was done. Okay, or it was actually right before. I believe the stock split was quote unquote priced in the next day here on Wednesday of March 29th. Yeah, right. Okay, so that is it for tonight, guys. Thank you so much for watching. If you guys really liked the technical analysis and perspective on what we can expect tomorrow on CPI for March's CPI data points, make sure you guys leave a like down below. And if you guys aren't subscribed yet to the channel, make sure you guys hit that subscribe button with the notification bell to be notified when I am live. But I am always going to be live on Tuesdays and Thursdays at 6 p.m. Pacific Standard Time or 9 p.m. Eastern Standard Time. So I changed the time here. It used to be 7 p.m. Pacific Standard Time, but I do have other meetings. So I have put the time back to 6 p.m. Pacific Standard Time. So if you guys want to join again on Thursday, make sure you guys come right at 6 p.m. Pacific Standard Time or 9 p.m. Eastern Standard Time. All right, and if you guys haven't checked out the CFO Swing Watch newsletter yet, and if you guys want to become a member, make sure you guys check out the description box below where you guys can see the link to the newsletter. It's the very first link. So you guys will be able to become a member of the newsletter and become a part of the private CFO Discord community. All right, so hopefully I can see you guys, some of you guys in there by the end of this week. All right, and if you guys have any questions on that, make sure you guys hit me up on any social media platform. You guys can email me, you guys can DM me on Twitter or even on Instagram at chartsfocus1. All right, have a great rest of your night. I'll see you guys on Thursday and good luck tomorrow. Good night, guys.